The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach to go, dear friends. And man, the Chinese curse of may you live in interesting times has come to the stock market today. We are currently off about 13 points. It feels more like 50 or 60. I'm not exactly sure why, probably because of the push earlier this morning. Volume is in at 2.7 billion shares as we start the day. 1976 on the S&P cash, which is off 13 points. But, you know, we'd been up to 2005. This is one of these days that really starts to remind me of trading days of old and a market that is much more responsive to supply and demand that it has been in the past. And if you were up early in the Tiger's Den, I was watching fairly tightly until probably around 10 o'clock or 10:30 till everything started settling down. But Mario Draghi out at, of course, a little before 7 with his speech. And then, of course, we had to wait till about 8:30. 8:30, he actually had his press conference, started getting questions, and everything started to come off the rails. Basically, when he said, and I'll paraphrase this, we're done. We've gone to zero. We're not going to be going down a whole lot more for negative interest rates. The dollar index went from, 97 or so up to, 98.42. It's given all that back and a buck. It is now at 96.06. And I thought, man, this is bizarre. So around 11 o'clock, I called a friend that I used to trade with a great deal. He is a big shot in Forex, actually went to work for a big trading firm. So he can't I wanted to get him on the show so he could talk, but nobody will let, everybody's afraid of getting sued or having something recorded or 100 other things. So he didn't want to come on the show today. But I've kind of had this theory that the only thing that makes sense for these gigantic moves every time the dollar gets into this 98 is that there's somebody big enough to sell. And I've talked to him before, but he says, yeah, well, you can pretty much assume that. You'll never know it for a fact. But we got into talking about it, and it's kind of this is the new QE. That is that the dollar should go higher. And what do? They literally flood the market with dollars in the Forex market and absolutely eviscerate it anytime anybody thinks they're going to move it higher. So the idea is to keep the dollar down. And I think a lot of people looked at this and said, you know what? If the Treasury is more than willing to drop plane loads, not helicopter loads like Helicopter Ben with his cash, but 747 loads, C-130 loads of cash on the market, then maybe there's something we need to worry about. Anyway, this market turned around. We're, 3 or 4 points higher than the low of day. The volume really hasn't started to pick up a whole lot. As we've talked over the last couple of days, options were really pointing to us getting down around that 1950 level. I'm not saying the wheels have fallen off the wagon just yet, but I have seen some of the most bearish movements in some charts out here today, especially in the FANG kind of stocks. We'll get into those today. And just continues to be one of these things where I think I talked about it Monday, and that is that I couldn't find a bear anywhere. and that made me the most nervous I'd been since the beginning of the year. One of the reasons why is that if you can't or don't have a lot of bears, it is so easy for a market to fall down. There aren't any natural buyers. If everybody walks away, there's a giant air pocket. And if you've ever been in a big plane flying across country and not had your seatbelt on, maybe you hit your noggin on there when it just went through the air pocket. Everything was okay a little while later, other than maybe that big egg on your head when you hit the overhead bins. But it still looks to me like 1950 out there. I looked at options last night. Could we get back up to 2,000 for next Friday? Yeah, but right now, literally these charts, we'll look at them later, are so incredibly bearish. I'm wondering what's up for next week. And maybe it is the FOMC meeting. Maybe a lot of people don't think that they're going to be quite accommodative enough. But do I see 200 points down next week in the S&P cash? No. But I didn't see a $2 move up and down in the dollar either. Many discussions earlier, I think during Basil's show, about not expecting it or not being surprised in the market. And one of our veteran traders in the den said, I'm no longer really surprised, but I didn't predict it. And it's kind of like I thought of two movies that really made me think of it. The first one, I was talking to Andy Heck last week, and I said, it's kind of like Kato in the Pink Panther movies. He'd walk in, and of course, he was supposed to attack him randomly so that the pink Clouseau would be ready for anything. And the other one was the hysterical skit from Monty Python where the Spanish Inquisition pops in, and everybody says, nobody expects the Spanish Inquisition. Well, that's kind of what we had here today. Nobody that I knew was really talking about it. I thought we were going to kind of pull back down to that 1950. Didn't know how it was set up. Certainly didn't see the way everything was going today. Almost thought I was going to stop out a couple of my short positions, only to see them give a signal that makes me think that maybe my downside target was way too high, because I haven't seen stocks do this since other cult stocks of old, and even back to the 2000 days. This market, at least, not exactly, and maybe just in a passing phase, reminds me of 2000. That is the initial sell-off in the first week of the year. The market kind of came back up in May, and then we saw the real selling come on in May and throughout the rest of the year. I just get to see, when they get these kind of moves like we did in the dollar today, when we get failures, which I'm going to call today kind of a pretty massive and important failure, especially when you get into some of these individual stocks in tech and the NASDAQ. I think it's pretty obvious. There's something going on. I don't know what it is yet, but someone's scared of something. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Somebody in the den talking about Stephen Stills. Just one of the funny things that I did is we installed in house video studios for many people. Bill Gates in his house, and Stephen Stills had I think maybe still does, have a house in Maui. And so we went out there. That's when I actually got my diver's certificate, Maui certificate, while I was working out there for a week while we were putting things in. Never really talked to the guy much. He was always just kind of floating around on a phone. And, of course, for about 2 days, he was going through a giant, what do you want to call it, negotiation with Home Depot at the time about using my house. It's a very, very fine house. Anyway, the yelling back and forth, it was quite clear that for 30 seconds, he wanted at least $1 million for putting that in their ad. I think that probably had to be like 95 or 96, 1995, 96. Yeah, interesting anyway. Very interesting, folks. Okay, it's time to get this party started, folks.
Then it's all just a little bit of history repeating.
And on yesterday, we won't go that far in history, John Goodfriend, I don't know how it's actually pronounced. I've always read his name, Goodfriend. The subject of one of the biggest books around trading called Liar's Poker, by the same author that wrote the book that the movie that came out in the fall was based on. He's written several books. Anyway, the gentleman at the head of it, which he was the CEO of Salomon Brothers, and maybe Andy Hecht when he gets on the radio today in his show, or maybe with Tom. Maybe my guess is maybe he bumped into him at some time or another. But anyway, the book actually captures a very important part of Wall Street history. That is probably at its worst. A lot of movies were made around the culture of the Salmon Brothers mortgage department, where a lot of these guys really made and got the environment that blew up in everybody's face for junk bonds, everything else around it. But very interesting. If you've never read the book, I love the history of the stock market. And if you ever want to read a book of the dark times, Liar's Poker is fairly interesting. Probably the most interesting thing to me in it is they had a bunch of stuff going on there. Apparently, if you weren't any good at your jobs, you were going to be sent to Equities in Dallas, which was a undesirable job within the finance firm. Blowing up a customer, successfully convincing a customer to purchase an investment product which ends up declining rapidly in value, forcing the client to withdraw from the market. Feeding frenzy, traders that would compete with each other to see who could display the most gluttony. That was on Fridays. They would order like 20 pounds of coleslaw or something. And not that far, really, from what we saw, that movie just a couple of years ago about the Wolf of Wall Street. Human Piranha. And apparently Tom Wolfe's big book of the time that was really skewering the early days of the profit at any cost part of Wall Street, and that is the bonfire of the vanities. But I'll try to, I think, what is this? This is Thursday, so Andy Heck will be around. I think he had something to do with Solomon Brothers, didn't he? Maybe he can tell us a little bit more about this character. Anyway, very interesting book, and maybe you can even tell me how to pronounce his name. VRX, we're very interesting moves in this. Of course, talking about losing your shirt. We've got some of the bigger investors now pushing Valiant around. They've got 2 or 3 new board members as of yesterday. And one of the other things that they're doing, of course, everybody and their dog short this thing, is now rattling everybody's cage. And they're going to do this by a variety of ways that have been tested and stock market approved. They already started talking about which parts of this company that they could sell, how they were going to get rid of the current CEO. But probably most interesting was floating the trial balloons about selling Bausch & Lomb, the eye care product. I used to wear contacts. Bausch & Lomb blew up, and they were just about bankrupt. They had some kind of bad lot of saline solution for contacts. Made a bunch of people go blind, and got sued into just about non-existence. They ended up at Valiant. Did I say Vertex? Valiant. And it continues to look like they are going to continue on. Anyway, they got some other stuff going on, but they got some settlements resolved between them and them and Valiant, and Vertex. So some things may be interesting coming up, but there's more than one way to skin a cat in these stocks. I just don't understand the whole idea of probably hopping on down here. You do have some people that are pretty good at doing what they do. They'll clean this company up. They'll fatten it up. Maybe they take it private. They'll bring it back, and they'll foist us back on it. But this company has a history already of, like I said, Bausch & Lomb, of spotty results over time and big problems. But I think it's Ackman, and he's gonna, or at least he's now got the board seats and a lot of other stuff to get rid of the CEO. Look for a lot of turnaround talk in this one. One of the things he will need, though, is a cooperative market, and that may be the hardest part to get into. We're off 10 points on the S&P cash, which normally wouldn't feel like a great deal, but of course that's 27 points off the high of the day. And of course, going into a weekend on Friday, the question is, are you really going to want to let it all hang out, or are we going to see kind of a drip, drip, drip into the FOMC meeting? The announcement, I guess, is on Wednesday. And right now that kind of sets it up. I don't see anything in the way of earnings reports that are going to come out anytime soon that are really going to change this market. We had a couple of decent ones for recent IPOs, probably a little unexpected, not horribly unexpected. Both Box and what's the other one? Square had decent earnings, although I thought when I looked earlier, Square was down on the day. SQ, wasn't it? Let me pop it up real quick here if I can get to it. Yeah, off 7%. It doesn't seem like the CEO of both Twitter and Square is going to catch a break. Not exactly sure why it's down. I'll look at it during the break. We'll pop up the chart. We'll get to it. In the meantime, give me a call at 877-927-6648. Email me at pat@tfnn.com. Post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Jeff doesn't say where he's from. Would you look at GDX, please? You've had a big run, of course, from about $12.40, 76 million shares down there at the bottom to a nice high volume move here in March 4th. What else could you say about it? I mean, that a wicked move. I've talked about this bigger pattern, not in particularly in gold, but just about everything else. That is that everybody gets to the top, and you don't have a lot of people wanting to buy the breakout. Everybody wants to buy the pullback. Sometimes markets just keep going on that. I'm not exactly sure that you're long already or you're short already or what you're doing. Man, if I'm long, you've had a big move out here. I'd like a little retrace if you're thinking about getting back in. Just a standard retrace would be 1764 for 382, and 50 would be 1664. I don't think I'd be going long now. Could you get you got a high volume move. It spiked, it kind of reversed out of that spike. Normally you get a normally you get a retest of those highs. I just don't know how you would play this now. I mean, that's why sometimes it's just better to call, find out if you're actually long now. I mean, what I would be hoping on any stock, whether it was GDX or anything else, if I was not long and missed a move, would be to wait until it all comes back. Now, kind of interestingly, there's a nice little gap down here at about 1850. And to me, that might be the first level of support if you wanted to buy it on a pullback. What else do we have out here? I'm going to go out here. Okay. Well, Andy says that he will not comment on the air, but he will be writing about the guy from Solomon this weekend. So we'll be able to look at it in one of his Seeking Alpha articles, I guess, probably on Monday. Anyway, it would have been nice if you would have had this high volume pop in the GDX back and just pierce the May 14th high at 21.25. But this is not very different than a great deal of other stocks that have been that we've been looking at in the markets, and that is they come up there, they either test and come back into the trading range, but they had more volume. Normally you get a decent breakout and then you pull back to the breakout, but I just really kind of continues to look like a trading range for a great deal of what's going on in the market. We're off only 10 points on the S&P cash, just getting ready to, just a little over 2.9 billion shares. So volume was very light early in the day. It picked up some, but did not pick up all that excitingly later in the day. The one thing would be very interesting, and I'll look at it tonight, we'll talk about it more, and that is if they push down to actually load up for next week or something. So we'll see that in the options tonight, but we'll talk about that tomorrow. But right now, I didn't see over the last few days, I saw almost no shorts in the market, very few, if anybody, shorting anything, and a lot of short squeezes. And normally that's a pretty good indication in individual stocks, especially in technology stocks. And that's why you have such a light volume when you get to the highs. The only people buying up there tend to be shorts getting squeezed out at the last whiff, and of course covering at the exact wrong moment. And if they would have just waited until 4 or 5 hours later, stock may have been down $5 or $10. Aaron's is down here. Had a question on this one. If there's anything else, let me get at it here. What did I have? I thought I had Aaron's. There we go. Come on, there we go. Very interesting move in it, but again, nothing out here that really tells me that this thing has any juice in it. There is a double gap, and if this thing comes up on light volume, what I'm looking at is this huge gap down, of course, a previous gap that goes back to the 31st, and a great deal more issues out there. What is that? The 31st of 2015. Anyway, that gap For some reason, I'm losing everything here. Let me try this real quick. Okay. So that gap was on the 24th of April, 1.4 million shares. So it goes in back into all this gap out here. And I've seen a great deal of these stocks when you see these multiple gaps set up, that you really have a pretty high chance of that's exactly where this thing is going. Of course, Aaron is a rent to buy where you pay far, far, far too much, but you get to make monthly or weekly payments, isn't it? I think that's what they advertise. And one of the reasons I wrote the Art of Timing the Trade Charts the way I did in showing gaps is just this, that you can see how these multiple gaps actually put themselves together over time. But I've seen a great deal of, I haven't done any extensive tests, but normally what I won't do is short one of the things until it actually does hit that gap. That'd be basically a 50% retrace off of the blow apart that started on October 9th at $40.80 down to the low of $20.24. So basically it got cut in half, and apparently it had the 50-50 warranty. If it breaks in half, you own both parts. Unfortunately, they're only worth half. And this thing has bounced up a bit. Just hasn't had any kind of real energy out here. Could this thing drift back up? It could. And if I was going to think about shorting it again, man, $30 looks pretty sweet on it. Apple has been kind of interesting on this. What is it printing off at right now? $100.50, just off 62, but it was up to 102.24. They have set their date for the rollout of the new phones, and I wanted to talk. I don't know if I have enough time. Nah, I don't. In this segment to handle it. But I've been looking fairly hard at the new Samsung phones, and I'm thinking why Apple software is probably still going to be better. Even if they just ship the software that they had with the old phone is going to be better. I think it's going to be extremely hard for Apple to beat this new Samsung Edge. It is absolutely gorgeous, beautiful. One of my friends actually got it, had ordered it, and got it like 2 or 3 days before it was supposed to even be out. And while I was over at his house, I played with it a bit. We'll talk about the software when we come back and what Apple needs to do on the 21st when it rolls out its next phone, and maybe how it will react to that. Be back in a minute. Give me a call, 877-927-6648. Email me at path@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And one of the interesting things I learned early on from Trip Hawkins at Electronic Arts, circa 1985, 1986, I was working on a project called Deluxe Paint. It was one of the first paint programs on a computer. And he was giving a speech to the folks. And he said, you know, whatever you first see in software is exactly what you expect in everything that you see somewhere else down the line. Just like a baby duck, the first thing it sees is its mother. And anytime anybody wants to change anything, it becomes problematic. And for me, since I started on Android phones, no big deal. For somebody that's had an Apple phone, it seems like there's a lot of complaints when you look at Samsung. Most of it has to do with the fact that there's 3 or 4 different apps that will do the exact same thing. In the Samsung phone, you can have the Samsung browser, or you can use the Google browser. And for some reason, this tends to really irritate anybody that's had an Apple machine, or I mean, iPhone before. And it's very interesting to the reactions. But I tell you what, absolutely a gorgeous phone. They've done Apple and bested it in the hardware. I love the rounded edges, the screen. Nobody makes one better. There's a few things in the software that are probably a little annoying, but since I started with Android, it never really bothered me. But normally when you get into a lot of the reviews, that's normally what they start getting in on is that it isn't this way. And of course, the reviewers, you know, basically had iPhones for 2 or 3 years before there were any Android phones, and they got used to it. They are the baby duck, and it has a lot to do with whether or not you can use something or not. Does it work the way you actually did? If someone came out with a car that didn't have a steering wheel anymore, it had a stick, and that's how you drove the thing, literally like an airplane, I bet people would absolutely go batso on it. And that kind of tends to be it, probably why there's Apple people and Android people out there. The ads, I think, for Android are quite effective. If you've seen those over the last 2-3 months, especially the ones from the Super Bowl, around the Super Bowl, trying to push that there are a lot of different solutions as a plus instead of everybody being the same. Now, Apple, of course, the 21st is going to have their new phone. One of the problems that Apple has had, of course, is that they depend on everybody else, i.e. Samsung, for their displays. So my guess is that the Apple display won't be any better than the Samsung display. But the real question is probably not how different the phone's going to look. My guess it's going to have a bigger battery, and they solved a lot of those issues. I think you can make a case that why the last phones from both Samsung and Apple are good. that both of them had batteries that were too small. It's probably the biggest flaw. But Samsung's really looking at a lot of people that are long in the tooth with their Samsung 5s. And I think that this is the year for them. I tell you what, if you look at the phone, you will have to own it. It is absolutely incredibly gorgeous. Now, Apple's job on the 21st is probably not to show some piece of hardware that beats Samsung. At best, I think, unless they have something really amazing, it's probably not going to do that. It's got to be some kind of new feature or new software to do something. But again, that will be the 21st. Normally, they start their presentations for the new devices, and that is around 1 o'clock. So if you want to put on your calendar that 21st day, that's on a Monday, normally look at those things getting started in San Francisco around 1:30, and maybe it'll be earlier this time, but normally that's around it. You want to make sure and check it out. But if you're trading Apple, a lot of people already are thinking about how they traded up into this release date. And I don't know, maybe this is one of these times where this thing just goes sideways into the release date. I think it is certainly going to be a Missouri day, and that is show me for Apple. They've got to beat Samsung and not just do it on the software, because I think there are enough people out there with Samsung that have gotten used to the Android way. Let me check. I got a couple of emails here. BHP. Oh, Jeff is from Kissimmee, Florida. Thank you very much, Jeff. BHP. Let's take a quick look at that. BHP. Take a quick look. Confluence levels. Yes, on BHP, you basically blew through or back, let me put it that way, back to the smaller one. The question is about where these confluence levels are. Pretty close, $24.75 to $25.22 on BHP. You've kind of filled this gap. A lot of times gaps do act as fairly decent support. You want to watch the volume coming back in. But if you're really thinking about playing one more ABC up in these, the energy off of the A to B was good. You had a decent B to C move, about 2 days, ran back up. Now you're having a little bit more orderly pullback in here, but 24.75 to 25.22. Normally what I like to see is a piercing of the confluence level that doesn't last long, maybe an hour or two during the day, a pull back up into the trading range. Of course, you're also going to be going into the candle of the 3rd of March, and that volume was 7.2 million shares. Yesterday you had 5.6. So volume coming down, but if you could get about midway in that candle, pierce that confluence level, hopefully that answers all your question. And it's only G. And so I don't know his full name. And he didn't tell me where he's from. So he's from Lutz, Florida. Copart, we looked at this also. And wanted to see how this one was. We were talking about this one yesterday. Had a lot more downside earlier in the day, still up here on light volume today. And I don't know if you can say anything more about it other than that. A little less energy, but it just seems very hard to push these highs. I wonder if that's a bad tick or if that's actually a move all the way down to, what is that, low of the day, $38.35. Kind of hard to see out there. Yeah, we're moving a lot higher now. 1986 on the S&P cash. So 3 billion shares. I guess all you need in this market is, I don't know, an hour or two, and it'll move your way. What else is going on out here? DTE. Another one out here, DTE Energy Company. We've been looking at this one. It has pierced its high. That's the March yesterday. The February 3rd high was 87.84, 1.7 million shares. got into it with 1.1 million shares, kind of fooling around back up here at the highs. NG was okay, but Confluence is back to 84.36. And if you were looking at it, that would be the next place to buy and maybe set up for an ABC that would actually break that high.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We've got the one and only Tom O'Brien after this show. Of course, Andy Heck at 5 with commodities. And we'll get a good roundup. We're about 18 points off the high, about 16 points off the lows of the day, 3.11 billion shares on the New York Consolidated Tape, and a little bit of something for everybody out here, from the dollar move from the spike high to the low, to the spike down in the price of the S&Ps and the rest of the indexes, the rally that shows that no dip can go unpurchased in this market by the bulls. And we get into, of course, Friday, and that'll be a very interesting day. But I'm going to think we've got enough volume here, at least during this period, that says that at least today's 1969.25 low in the S&P cash gets tested. And this kind of been a thing where everybody just keeps buying this thing, and then we find some more sellers come along, and then everybody buys it up, and then more sellers come along. Certainly looks to me like a lot of distribution into every kind of move higher we've had for pretty much this whole week. Of course, we started off the week on Monday looking at a great deal of the Gartley patterns that had developed, and we were in a great deal of those, pretty much at about a 75% retrace on them. So they were ready and willing, and of course, more importantly, they had very light volume on the way move up. FFIV, we were talking about this one yesterday. Keep an eye on it. It has moved off that gap down with decent volume of 1.5 million shares back on the 9th. And 900,000 shares. And that's why we were talking about it. More important, just this kind of light volume bounce off the lows. Did go and test the previous low on lighter volume. But again, a lot of these really starting to show up as maybe a bigger trading pattern than anything else. And interesting. Holy Frontier. Of course, everybody is wanting to hop into these things. And you've got a fairly decent bounce out here. If you're really looking at the bigger picture, $37 actual is the 382. You kind of got that today, 36.85, and a pull back down. We'll look at volumes at the close, but it continues to be problematic. We had a couple of ETFs we were talking about in the energy sector that had hit the confluence levels. The IXC a few days ago continued to pull back a little bit. This one is down, not a lot of volume, but you really want to look for the next support area coming in on this one at 27.27 to what? 26.70. That's pretty much where more of a congestion zone. You also have a gap there. That low $27 mark is probably going to be probably when you want to look at this one yet again. One of the problems I have, though, with this one is the energy on this one. From the February 11th low to this March 7th high, did not have a lot of juice, and probably more than likely is setting up a consolidation and not an ABC that would bust out that March 7th high. Yeah, I think we've got some time and at least some patterns out here that could develop, not have to develop, but could develop into anything else. We talked about the telecommunications sector kind of blowing off yesterday. A little bit more pullback in that today in the IYZ. But we're out of time, folks. As we said, hang on for Tom Bryan and Andy Heck later. In the meantime, sell when you can, not when you have to. And we will see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.